Good afternoon. This is Sean Golding with Golding and Golding, here to provide a bit of a presentation companion to an article we had written recently about what happens when you report a foreign account on the FBAR, but not Form 8938, which is basically FATCA. Now, there are there's numerous different international information reporting requirements for different foreign accounts, assets, investments, and income. But the most common one that people know is the FBAR. It gets the most press. It has the highest penalties usually, and so people are most aware of it. Back in 2012, for the 2011 tax return, a Form 8938 was introduced, which is similar with a lot of crossover, but not the same. So let's go through the basics. FBAR, foreign bank and financial account reporting, not just your bank accounts. It includes bank accounts, investment accounts, life insurance policies, foreign life insurance policies, that have a surrender value, foreign pension accounts, things of that nature. It's not an IRS form. Technically, it's a FinCEN form, but the penalties are enforced by the IRS. I think that's back in 2003. The form for the past 7 years or so has been electronically filed only. There may be some exceptions for that, but 99% of the time you're going to electronically file it. It's due April 15th, but it's on automatic extension. The failure to report the FBAR can lead to significant fines and penalties. Rarely ever are they criminal, and the IRS has various offshore programs to assist you if you missed reporting in prior years, which I'll get to in a minute. The Form 8938 is a little bit different. The Form 8938 is for FATCA, which is the Foreign Account Tax Compliance Act. The United States has entered into more than 110 different reciprocal intergovernmental agreements, which just basically says, hey, foreign country, you report U.S. account holders that have foreign accounts in your country. We will report people from your country that have U.S. accounts. And it's to make sure that all reporting in whatever country is going forward and it's proper. And it's a ridiculous rule, but it is what it is. More than 110 countries have signed it. And there's less than 60 bilateral tax treaties. So this is something that a lot of countries jumped on for one reason or another. Now, the difference is with the FBAR, it's filed only electronically, and you have to file it even if you don't have to file a tax return if you meet the threshold requirements. 8938 is a little different. It's part of your tax return, so you only have to file it if you have to file a tax return. Let's say, for example, that you would have exceeded the threshold for Form 8938, but for one reason or another, you're not required to file a U.S. tax return. Well, then you're not required to file a tax return just to go back and report the Form 8938 assets. The penalties are a little bit different as well. It starts at $10,000, but there's a continuing penalty. So overall, it generally goes up to about $60,000 per year. The Form 8938, there's crossover, but it's not identical. So, for example, if someone has a stock account, that's reported on both, like an Ameritrade overseas, something like that. That's reported on both the FBAR and the 8938. If you only had stock that you owned directly, that's not on the FBAR, but it is on Form 8938. Form 8938 also requires that you delineate what type of income you have and the amount. So, line by line item, interest income, capital gains, royalties, dividends, things of that nature, rental income. So what do you do if you file the FBAR, not the 8938? Right? FBAR gets all the press. You've never heard of the 8938. So first, it's a common issue. And first you have to check to make sure you were even required to file the Form 8938. Unlike the FBAR that has the $10,000 threshold, the 8938 varies depending on whether or not you're married filing separate or single versus married filing joint, and whether or not you reside in the U.S. or abroad. You may have $90,000 in foreign accounts, so you have to file the FBAR, but you are single and you reside overseas, and the threshold is $200,000 minimum for Form 8938, so it wouldn't even be required. If you missed reporting 8938 or FBAR or any other international information reporting forms, 5471, 8865, 8621, 3520. There are various programs that you could enter in order to safely get into compliance. Please try to avoid all the fear mongering. It's nonsense. The IRS developed these programs to help people. If you're willful or you just can't certify under penalty of perjury that you're non-willful, you do VDP. Otherwise, if you're non-willful, there's various other programs available. streamlined domestic offshore procedures, streamlined foreign offshore procedures. Both are for foreign accounts, assets, and investments and income. Just domestic means you don't qualify as a foreign resident, and the complete penalty waiver instead, there's a 5% penalty. There's also delinquency procedures and reasonable cause. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.